Hey, good morning, everybody. Hope everybody's doing well. It is Thursday, September 13th, and the market has gone higher. Good morning, Charlie. If you guys can hear me, please type in the chat box so you can hear me. Good morning, Keith. JD, good morning. Awesome. A little bit of a lighter crowd today, which is fine. You guys, if you have any questions, Bob, good morning. If you guys have any questions, go ahead and put them in the chat box. If you have a longer question and you want me to unmute you, I will. And you can go ahead and ask your question on the audio. So, big market open today. We're up close to 168 points on the cash index. 161 on the YM futures contract. ES is up 15. Let me share my screen before I forget. There we go. If you guys can see my screen, go ahead and type that in, please. Keith, good to go. Everybody got it? Good. All right, great. I'll just minimize this a little bit, put it over here to the side. So we're up 167 on the mini futures contracts on the Dow. ES is up $16. NQ's up 79. Big move today, up over 1%. And the RTY is lagging here, just 0.25%. One of the, you guys all know about the... You guys all know about the Collective 2 strategy that I'm using for the volatility arbitrage? You guys know about that? Everybody know that? No? Really? Anybody else doesn't know about the Collective 2 strategy that I put up on up there? Using volatility arbitrage, my primary trading strategy system right now. All right, Keith. Well, here's the strategy. It's basically the YMNQ, but I also I've gotten into the ES RTY, and that's the one I'm doing personally this morning. I'm still kind of testing it out, but I really like it because it's a very it's like I mentioned in HOLM1, YMES trade is very, very slow, very plodding, moving, very, very slow trade. But I've been testing out the ESRTY lately, and I really like it for a couple of different reasons. Number one is that the moves tend to be not quite as sharp as the YMNQ trade. Like this morning, the YMNQ trade worked out beautifully. But it's very, very sharp moving, so it can turn on you very, very quickly. The ESRTY turns out to be a really nice trade. I put this on this morning, and I'm up about $1,300 right now. Well, about $1,100, and but it was a very, very nice trade. Not a lot of jagged moves. Very, very nice smooth curve on the ESRTY. And so I'm testing that out. It's been really good. But anyway, I'm using the YMRT or the YMNQ trade on Collective 2. And here's a copy of the URL that you can go check it out. Basically what I do is I trade. This is Collective 2 is a social trading site. And I put my trades in here, so I connect it to my account. So whenever I do a YMNQ trade, and I'm going to eventually put on the ESRTY trade now that I'm testing it out, I think it's really, really nice trade. And basically what I do is all of the trades that I have are for the YMNQ is listed here. And also, you have the people who actually start simulating the trades in their own account. And you can also hook up your brokerage account to do auto trade. So if you guys didn't know about this, this is up on Collective 2. That's the link to it. I got into unfortunately, I got into a little position here where I had a fat tail on the, and I actually forgot about the trade. It's kind of dumb of me, but I really just started this as a public record of my YMNQ trade, and I started on July 9th. That was the first trade. And so I guess that's about 40 trading days, and I'm up close to 40% already. And so this mirrors my account, what I do, and it also creates a public record for me for the volatility arbitrage trade. So you guys can go check that out. Pretty cool. Pretty cool. Since here's some statistics. I did the little trade this morning. It's in at about 40 trading days. We're up close to $10,000. You can subscribe to it. It's $35 a month. But if you guys want to subscribe to it, you just let me know, and I'll give you a coupon so that you can take half of that off, 50% off of that. Also, there's actually people who are putting real money into the trades. Right now, assets under management are $335,000. So people who have money but they don't know how to trade are actually signing up so they can execute those trades in their account. And yeah, so this according to the trading record here, 169 trades were done in real life brokerage accounts. So people are doing auto trading. I just found out about this site back on July 9th when I opened it up. And I said, oh, this is a cool way for me just to keep track of my volatility arbitrage trades. But people started following it, and now they're actually putting real money into these accounts. I'm really proud of the Sharpe ratio. It's over 5, which is really hard to achieve in investment. And some people say that that's not a really good measurement. The Sortino ratio is probably better. But my Sortino ratio is also really, really high. Let's see here. Sortino is 11.4. So I'm pretty proud of those. Anyway, if you didn't see it, go check it out. Links in the box there, and you can take a look at it. Anyway, thank you, and a shout out to 2 people who sent me scripts because they saw me putting the boxes around the 5-minute chart. I'm not going to say who did them because this one is a little bit buggy. You know who you are if you send it to me. See what happens is I try to center out the the chart here, but as soon as it refreshes, it like pops over to the left. The other person who sent me the 5-minute chart update it seems to work really, really well. So far, but what it does is rather than going all the way across to the end of the day like I've been doing, it just goes bar by bar, which is fine. It's actually not a bad little script. I do like it. And I do like the kind of the green highlighting and the red highlighting to indicate whether or not the, in this case, the NQ is above or below that 50% line in the 5-minute bar, first 5-minute bar. And you can see that, once it started trading below that 50% of the range of the 5-minute bar, when it came up against it, it was resistance. So it came up here, it was resistance, came up here, it was resistance, came up here, and it was resistance. So it's really handy to be able to mark off that first 5-minute bar if you're day trading any of the futures contracts, and then marking off that 50% level. It does tend to act as resistance. But also what it does is it lets you know that if the market is really weak, it's not going to get above that 50% mark. So it's a very, very handy little tool So I appreciate the people who have created these scripts for me. This one in particular, the developer, JD, said that he'd be willing to share it with the community. So I will post it up to the HOLM one download page. All right. How's everybody doing? Hopefully all you guys are doing well. You're all profitable. Making any trades today? Awesome. What kind of things were you trading today, Charlie? Greg, 1,005 this morning. Awesome. Nice job. Keith doing the ARB. Awesome. Charlie up 525 and 200 NQYM. Good. Excellent. YMNQ ARB. That's the one, baby. Yeah. Keith hit your number 500. Awesome. Yep, that's good. $500 a day, is nothing to sneeze at. I mean, some people, when they contact me, they say they want to make their living trading, and they ask me, what they need. I say I have no idea because everybody's situation is a little bit different. I had one guy who was about $500,000 in debt and had a $25,000 trading account. And he asked me if he could make his living trading. I said, well, you got to add up. There's so many things that you need to consider. And his expectation was that he was going to, double his account every month, which was possible. I mean, it is possible because if you do 500 a day, the average number of trading days in a month is about 2021. You could do $10,000 a month in profits on that 25,000 as long as you didn't, trade below that. And you'd have to have a winning day every single day. And the only strategy that I know that has that kind of an opportunity is the volatility arbitrage trades like these. So it's not just pair trading. And somebody asked me, he said, well, that's pair trading. Well, it's not really pair trading because there's a lot more that goes into it than just pair trading. So, for example, if you're talking about in the HOLM1 program, I talked about the relative volatility of all of these different instruments, so the YM, NQ, RTY, and ES. And the YM had the lowest volatility, which is a good pair against either the RTY or the NQ that has higher volatility levels. And so so when you trade between the YM and the ES, both of those are relatively low volatility, but the ES has a little bit higher volatility than the YM. And so what happens is you're not going to have much movement and you're not going to have much profit opportunities. So typically what I do is I go YM or ES against NQ and RTY. I don't do all four anymore like in the total market that we talked about, but I typically will do the YM, NQ, ES, and I'm testing the ES RTY as a kind of a second strategy, arbitrage strategy, and it seems to be working out really well so far. I like the way it trades. Sure. There you go. 3 to 4 months can double drawdown. Okay. So what would you like to take a look at, Keith? I updated it this morning, so those are the numbers from this morning. Did you download the newer one that I just uploaded to the HOLM1 download page? Because I think the one prior to that had an error in it. Yeah, do that because there was an error in it. I found out later. See, what happened was it was back in June of 2017. Yeah, it was June 2017. I added these 3 columns here, the date, the down, the NDX, so that it was easier to update. If you missed a day and you didn't know the percentage change, I added this so that it would automatically calculate the percentage changes. And I think there was a problem with the dates and a couple of the numbers. So I've updated that now and it should be good to go. Let me go back here because I think Eucharist had a question. Can you explain how to decide to go long or short YMNQ? And can you show the YMNQ chart 5-minute screen that you have? Okay. Let's do that. This is the 5-minute on the YMNQ. What I typically do is I'll take a look at this in the early morning. I typically do not get into the trade before the open, as I mentioned before. So if we take a look at the 9 o'clock period, just leading up to the open of the day, you can see that there was already a slight downtrend here in the spread. The other thing is when I looked at the spreadsheet. So let me take it step by step. So the first thing I do, and I'm going to take out the update here that I did this morning. So I'll take that update out. So I'm just looking at this before the open. Number one is I see a decline in the bell curve. I saw it come down to 2. It moved up a little bit yesterday when we're at 0.51. But one of the things that I keep track of is this UD number, which came from 10% down to a 4%. So it's a declining bell curve. Also, we peaked here on the at plus 2.56% on the spread. So typically that indicates a peak. So we probably peaked on the 6th. It was confirmed on the 7th as the bell curve started to come down. We started to get some negative numbers on the trend. Those negative numbers continued on the trend, which indicated that we're going to see the volatility arbitrage spread decline. Yesterday we were up, but we had negative numbers on both the trigger, the rate of change, and also in the first column of the binary trend. So I was anticipating a short position this morning coming into the market. And on 5-minute, when I started to see this kind of action where, all the moves higher were immediately reversed, move higher, reversed, and then it started coming down into the 9:30 time period. I knew that the best position to take at that time was short. And so I took a short position for the account, moved down. Short position on the YMNQ again is short the YM, long the NQ. And when we get down to this point here, at that point and then what I do is I'll switch back to the 4-hour chart just to measure the move. And that's really important because the average size move on a daily basis going back 4 years is 0.5%. So once it gets to 0.5% move, or any time it gets between, if it hits 0.30, that's like 60% of the move already. So when it gets to that point, I want to pay attention. Right now, it's at minus 0.30, but it actually got down lower than that. It was like 0.42. And so I said, okay, well, that's it. If an average move is 0.5%, I'm going to be looking. So I go back to the 5-minute chart, and I'm going to be looking for an exit. And my exit on the 5-minute chart, as soon as I start to see a green bar on the 5-minute, and it starts to engulf the previous 5-minute bar that was declining here. So this one right here, I got out right there. So as soon as I see this engulfed by a green bar, I'm out. And that's basically it. And that happened at about 9:45, 9:50, right there. Does that help? see. I think I missed a question here. Where do you get the NDX data? WSJ data seems to be different. Yeah, I get it from finance.yahoo.com. So I go to finance.yahoo.com for all my historic data. So for the S&P 500, the Dow, and the NASDAQ composite. And what you can do is simply go into, well, you need the NDX. So you don't want the composite index in there. So the symbol for that is the tilde sign, NDX. There it is right there, NASDAQ 100. So you have to, it doesn't come up automatically in the I don't know why they don't list it out here. They have the NASDAQ composite, but they don't have the NDX for some reason. Yeah, they don't have it. So you have to put in the tilde sign and then the NDX. I think that's called the tilde sign. Anyway, and then you'll have that data, and you can also get the historic data. So if you missed a couple of days, you can go back in here and get the historic closes as well, so that you can enter them into the spreadsheet. And you want to use the NDX. You don't want to use the composite on this because that's the closest to the NQ. The NQ is the 100 index futures, and the NDX is the NASDAQ 100 cash index. That's the one you want to use. Okay, hopefully that helps. Donnie, today, New York SDNQ, SDL morning, the spread just kept going down. Well, what happens is on a big day up, like typically like today, you get a surge of buying at the open. I need to get rid of this. Hold on a second. Just FYI, in case you didn't know, there are orders that are entered into the exchanges prior to the open. And so it opened, the SD opened at plus 12, about 12, almost 13. And so what happens is typically you see the SD open higher and then start to decline. What you really want to do is also take a look at the ST, the strength index. Like right now, we're starting to see a little bit of a decline both in the SD and in the ST, the strength index. They're both declining at the same time, which would indicate a little bit of a pullback. But let me do this. I need to put my 50% mark in there. So approximately 50%, right about there. Need to get that on the 0 line. There we go. See if that holds. So in any case, the SD is going to be high at the open. In almost every single case, it just kind of settles down into either a flat. If we get a big reversal today, it will actually continue to go lower and go negative, but I don't see that happening. But in any case, you have orders that come in overnight, early morning orders that are submitted to brokerage houses. And so they're market on open orders. So institutions, individual traders, basically what they're going to do is say, hey, I want to go long the market this morning. A lot of pension funds and other institutions are placing new money order trades, so they have new money coming into the pension fund or the 401k. There's no pension funds anymore. The 401k, so the funds that are run in the 401k are getting all these orders, cash overnight, and they're entering market orders at the open. The large institutions, especially 401ks, I mean, they only trade at the beginning of the day and the end of the day. So if you've ever tried to exit a position in your 401k that's managed by a, where'd you guys go? That is managed by a, large fund, they're typically, if you try to redeem any of those shares of any of the mutual funds that you happen to be in or any funds that you're in, they typically aggregate those orders for market and close. So the most volatile times in the market are typically the open and the close. At the close, you're going to see SD do some weird stuff as well because market and close orders are coming in, and any redemptions that those funds have are entered in aggregate. Are entered in aggregate at the close. But the SDNQ all morning, how do you go short? Was NYSD was greater than the NQ? Well, the NQ, look at the NQ was up 7.5, so it was pretty close. I mean, yeah, the SD was definitely higher. But right now, you can see, you have to kind of wait for this to settle down a little bit. You really need to use the oscillator. You need to use the oscillator and the YMNQ chart to make that determination. It's always nice to have confirmation that in fact the the YM is going to be weaker than the NQ. But right off the bat, look at the strength on the NQ. Yeah, the SD was a little bit higher on the YM, but the strength indicator, there was only 0.4. So the strength of the move was much weaker. The strength on the move on the NQ was 1.33. So it was much higher. So you have to look at both SD and ST. Okay. You've been able to get the DX info from the WSJ? Sure. Yep. Good. You got out a little sooner than I should have, but have based off. Yeah, absolutely. Yeah, you don't have to hang around for this trade to work. The YMNQ, typically, I mean, this lasted like, what's that, 5, 10, 15, 20 minutes. That's it. You don't have to be in that trade a long time. I'm liking the ESRTY though. I mean, it's a little bit slower moving, but it is definitely not as choppy as the YMNQ. The YMNQ, man, that first 10, 15 minutes in the morning, I've seen some trades go as long as 40 minutes, as long as the 5-minute chart continues to act well. But this morning, you start to get, here's another thing to look for in the 5-minute chart. Not only do I look for that engulfing of the previous bar, but you see how elongated these bars are, how long they are? When they start to shorten up like this, the little hairs on my neck, on the back of my neck stick up. And I'm like, okay, warning, warning, warning. Hey, this is starting to slow down. The momentum of the arbitrage opportunity is starting to slow down here. And so I'm kind of on high alert that I need to exit this position. What you want is no resistance. So when you have a really long bar like that, the resistance is very low for a decline. Very low for, resistance is hardly existing at all here. When it starts to shorten up these bars, then you just want to be careful and watch out. I think that's just common sense, but I don't know. All right, let's see. I need better to have both. Yes, absolutely. You want to look at both. You want to look at the SD and the ST because the strength index is going to tell you. See, even though SD is starting to drop on the NQ here, the strength index is holding steady. And typically what happens is so that means that probably the NQ is going to continue to go higher here. If the strength index really starts to tail off and really starts to drop as in the same direction as the SD, yeah, then we're probably going to see lower prices on the NQ. And just like we're starting to see a little bit here now. We're starting to see the SD come down. We're starting to see ST, the strength index, starting to move towards that zero line. So you're comparing apples to apples here. Yes, there's more buying coming into the industrials. So this number 8.01 indicates real buying coming into the industrials. This is 2.89. Okay, there's less buying, but the actual movement of prices is stronger. So you have to kind of look at both of those, and you want to be able to measure both of those. In this morning's case, I just went off the chart. Let's see. On the swing trades, when you come to enter a trade, would you note whether there is a 15% difference between the pipeline and the third column? Absolutely. So in the strong market, their updates since Monday indicated that as soon as you see a 10% more drop in the flow, that indicates a change in trend. So the flow was constantly starting to move up. We didn't get a 10% decline here. It was at 130 and then 128. Let me just pump this up a little bit. So it was 130, 128, and then the next day it was 127. So we didn't get a 10% drop, but we did get a 10% drop on the 11th. And that indicated that pretty much the decline, or at least the danger of a sharp decline, was pretty much over at that point. And so we're up 27 yesterday. We're still up 126 today. So that was probably the end of the decline. And then, yeah, so as soon as not only is there a 15% difference, but you have, so here it was 15% actually right there on that day, on the 10th. The other thing that would be occluded to take a long position on a swing trade is there was no bearish herding. The bearish herding was way out, an outlier out here. See, there's priorities to the bearish and bullish herding columns. The first column is the most important. They call it recency. And so if you get bearish herding that's way out here, it just means that it's very weak. And there was no bearish herding in the first column. So when you get a 15% difference between the third column and the pipeline, and the third column and the flow, and you got no bearish herding, that's a pretty good sign that the trend is going to go higher. Donnie, thanks. You're welcome. You got in at 9:33 and was perfect. I mean, you don't have to, Greg. You don't have to stick around in these trades. I mean, when you're in, you take your profits. If you got a good profit, it's a profit you can live with, even if it's only a couple $100. But I would use the 5-minute chart to to filter a little bit your exit times, so that when you start to see these smallish bars start to happen, that's the time maybe to take your exit, rather than so you can hold on just a little bit longer. But if you hit your profit target, if you got a profit target of 500 a day and you hit it, take your money. Eucharist says, Dave, what I need clarification on is that upon entry of, say, for a buy, the swing signal is up, the flow is less than 90%, but the difference between is 15 when you enter. Greg, great, thanks. Yep, no problem. Okay, so if the flow is less than 90%, which we haven't gotten to yet, I would not wait until the flow is less than 90%, because typically that's pretty much probably getting closer to a more mature move. The only thing that concerns me a little bit about this move, this 113-point move that we had, what was that, Tuesday, was that there was no bullish herding. And typically anything over 50, 60 points has bullish herding with it. Here is this move up 63 points, bullish herding, 134 points, bullish herding. It should have had some bullish herding, which means that there wasn't a lot of backing by the bullish crowd on this particular move. But anyway, I would not have waited on a swing trade. The only thing I would have waited for was a 10% drop in the flow, and then I would have gone long. So during the day, actually during the day on the 11th, the flow was already down about 9% at the open of the trade, open of trading, and at that point, I probably would have taken a chance and gone long on the 11th. I wouldn't wait until the flow is less than 90% though. Personally. All right, let's see how we're doing here. I do like this ESRTY. Wow, actually that's a pretty decent move today. It's up 0.5% right now on the 4-hour chart. It does seem to act really, really well. I like it. I'm up approximately. So the RTY has gone negative. Here's another thing too, guys. Are you guys, anybody using the, let me see. In the swing video, instruction is 90% or less for a buy. Really? That's confirmation. Listen to the video again because that was confirmation of the swing trade. I wouldn't wait for confirmation. Typically, I think it was in the PDF that was attached to it that there was, when the third and the flow was 15% or 12% or 13. When it was a large number like that, then that's typically the end of the move lower. And so I would have probably entered at that point. I think the 90% was confirmation, but I'll check the video again. You can enter, I mean, there's no reason to ignore that advice. I mean, at 90%, yeah, as soon as it starts dropping, the flow starts dropping 90%, we're probably already well into a move higher. So that's like confirmation that the move is going to continue to go higher. If you want to, I guess you could wait till it's 90% or lower. Absolutely. One thing I want to ask you guys, is anybody using the RRG charts? If you're doing the volatility arbitrage trade, is anybody using the RRG charts? You guys know what I'm talking about? These? If you're not, I do suggest it. They're pretty cool. So if you're not familiar with relative rotation graphs, basically what they do is they tell you which of the indexes you input is lagging, improving, leading, or weakening. And then what you can do is you can adjust this. You can find this at stockcharts.com. You can do a couple of the symbols for free. All you do is go to stockcharts.com and go select RRG charts and enter a symbol. And what it does is it's pretty cool. I talked about these charts in the HOLM program. But you can pick a look back period. Typically, I don't go back too far, maybe just the last couple weeks, because I want to see which one of these indexes is improving, leading, weakening, or lagging. And what happens is with this chart is that a lot of times, like between the Dow and the composite, the NASDAQ composite, you'll see them rotate. And when you animate this, which I'll do in just a second, you'll see that the once a index starts to improve, and then it starts leading, and then it stops leading, it comes down into the weakening section, and then it goes to lagging. And so it's just another way of confirming that, in fact, hey, one is going to be weaker and one is going to be stronger. Now, typically what happens is the one that's improving goes into the leading sector, and at that point it starts to weaken, and the other one starts to come up. And let me play the animation, I'll show you what I mean. So you can see the industrials are leading, and it was the composite, and now they're coming back down. And let me go back a little bit further so you can see even more. Let's see how these work. And it goes into the weakening, then it goes into the lagging, the index, and then it goes into the improving section. So what it does is it tells you that, in fact, the composite now is starting to weaken compared to the Dow. And so eventually, I think we're probably going to see another up move in the difference between the YM and the NQ. But if you subscribe to it, you also have the ability to enter the RUT, the Russell 2000. I think over time here, you're probably going to see the RTY Russell 2000 decline relative to the YM and the ES. And so if you're taking a longer term position, take a look at that and see if you might, if you belong the YM or the SPY or the diamonds or something in the ETFs, and then short the RTY. But it's interesting, very interesting. All right, I need to exit this position here. I'll take that a little bit late. Busy with you guys. Okay. Okay, I'm going to leave the last 20 minutes open for any more questions you guys have. There's a couple things I want to draw your attention to, though, before I forget. Number one is I uploaded a video by Ray Dalio. Ray Dalio is the CEO of Bridgewater, one of the largest hedge funds in the world. And he wrote a book called A Template for Understanding, the Debt Crisis. And it's a free, he released the book as a PDF, which is free on his website. And I included a link on just below the video when I posted it to the website. This is in the Tradingology members area. And he draws parallels between the U.S. debt crisis from 1928 to 1937 and today. And so I think it's probably pretty useful to go through this and read it. And so you have a better understanding of exactly what kind of situation we're in now, 10 years after the financial crisis. And basically he's saying there's a lot of similarities between what happened in 1928 to 1937 and what's likely to happen in the U.S. over the next couple of years as the Fed winds down and starts to eliminate some of the debt that they accumulated by printing money during the financial crisis. So some of the things that he's saying, though, are pretty harsh. He's not sure, he doesn't think equity markets are going to drop a lot, but he did draw the parallel between the 1930s, especially 1935 to 1937, where the market dropped about 50%. So at current levels, we're talking about a decline of about 13,000 points on the Dow Industrials, which would bring it down about 50%. He also says that typically in this period, at least in the 30s, there was a lot of social unrest. And So he draws some parallels to today as well. But it's worth getting. If you go to the website, the only thing they ask for is an email address, and then they send you the PDF to that email address. And you can get the book for free. So it's really it's worthwhile reading. I think it has a lot of good information in it. Something that you should just be aware of. Today is futures rollover. Traditionally, today is the rollover day, or tomorrow. Friday, typically I do it the week before the expiration. So I'll start to roll over to Z8. If you're in futures contracts, you want to be in Z8 tomorrow. That means that, let me do the changeover now. You want to be in the Z8 contracts. The big volume is probably going to start coming in tomorrow on the Z contracts, the U contracts. U contracts will trade all week tomorrow or every day next week. And the volume is still pretty decent, but typically tomorrow is the big day for the changeover. Most of the volume is going out of the U8s and into the Z8s tomorrow. You traded Z8 this morning? Yeah. And if you're trading the treasuries, remember that they have a different rollover date. Theirs is much earlier than the index futures. Is anybody doing treasuries? Yeah, okay, good. So the market is starting to drop just a little bit here. Yeah, it's gone through that 50% line. Looks like NQ is holding right at 50%, but the Dow has definitely come down. Oh, look at the SD. SD is down minus 44, minus 52. Let's see if there's offsetting transactions. One of the things that I look for here is when we get a big sell-off like this, now we're down 80, 91 on the SD. I'm looking right here. 67. Oh, it's really starting to move down. The strength index has gone negative on the NYSE. And now we're getting some offsetting transactions. Get a couple of them. We've got a couple offsetting transactions, but nothing huge, like 0.24 or 24. That was about it. Anything on the SD, anything over 10 is typically institution. Anything less than 10 is retail traders. So it looks like retail traders are trying to come in here and buy this little dip. That's 11. A little more interest. 9. Interesting. So we may yet see the market decline a little bit. Didn't see any offsetting transactions there. So small institutional sell order. I wouldn't say that was a huge institutional sell order at minus 91, but that's pretty close. That's still fairly big. I've seen them as high as minus 5,000. But we are below that 50% line now. I wonder what the MTXL is doing. Yeah, we've shrunk tremendously on the Excel script. Number of declining issues has shot up dramatically here. Volume hasn't kept up though. Volume is still pretty low. But the number of declining issues has gone up dramatically. We may have a reversal of some sort today. Interesting. The Nasdaq still looks pretty solid. Very solid on the supply on the ST. The strength index hasn't dipped into negative territory. Yeah, it looks pretty solid across at 50% so far is holding. You showed a plus 319 at 10:37. I'm on a 5-minute. Are you on a 1-minute? Yep, that's a 319 right there. So we may see, this might be just a institutional sell order coming in here, or a buy order, and we may see it bounce back up again. But then we saw a few sell order. This sell order here was minus, it's not huge, minus 13, minus 11, but it was minus 92. So we'll see. Keith, yes, the time frame does matter. I mean, actually, if you're looking, so now we're starting to see some supply demand come in. See the time frame. So it doesn't matter what you're using. If you're using a 1 minute, a 5 minute, 15 minute, whatever it happens to be, it's a snapshot of the SD at that moment when it closes. So in order to catch these in real time, you actually have to watch it. So you have to watch the SD numbers as they happen, because they can happen in a flash. So if you were trading it, you want to make sure that you don't see a large, let's say you see a large institutional sell order, like minus 200 or 300 or 1,000 or whatever it might be. If you don't see immediately a plus 400 or 500 or 1,000 in the same second or two, then it's not going to be captured because the time frame ends after 60 seconds. So you actually have to watch it. I tried using the SD on tick charts; it wouldn't work. So the only way you can actually capture that is by using by actually watching it. So the time frames do matter. So like on a 5 minute, here's what's captured on the 5 minute. It's like a snapshot, just like you taking a picture of your family at Niagara Falls or something. It's a snapshot in time. And so if you're using a 1 minute chart, you're going to see a different picture. It captured this like a photograph of a institutional buy order at 319. On the 5 minute, we saw a negative 92, but when that 5 minute period ended, it was only minus 13. So yeah, it definitely does matter. And you should, if you're day trading these, you need to watch it like every second. All right, guys, if there's no other final questions, I think we're going to wrap it up for the day. And I will see you guys again next Tuesday. Please go on the website at Tradingology in the members area and download that book by Ray Dalio. Also, check out the recording I did yesterday if you haven't seen that yet. Yeah, no problem. And also, if you guys haven't seen it yet, I'll put the link in the chat box again. I tend to be a little bit more conservative with this particular strategy because now there's actually people who are following me. I was just kind of playing around with it as a test, I guess. But I'm going to take it more seriously now. And I'm a little bit more conservative with it because other people are putting money into it. But you guys have a great day. Yes, today's recording will be posted hopefully tonight. Should be good. Should be up around maybe 5 p.m. Eastern time. No problem, Bob. All right, guys, have a great day, and I'll talk to you again next Tuesday. Have a fantastic weekend.